Okay, I just want to take 2 minutes of your time to show you the benefits of becoming a member of the Green Star Trading Patreon, all the various things you can unlock. So here we are on the Patreon page as you would see it as a prospective customer. So let's just scroll down before we discuss the tiers and have a look at what I've done recently. So if you were to become a patron today, you could potentially unlock 150 exclusive posts, and most of them are going to be video content. For example, I recently did a video for my patrons on bond ETFs. Is it time to buy? Interesting subject. Had a lot of interest from this on the Discord. We've got the most recent live stream from last week. This went on for 4.5 hours and is timestamped on YouTube. We discussed a whole bunch of assets, and the great thing about the live streams is if you request a certain asset in advance, I will find time to look at it. Okay, now I don't care what it is, it could be anything of your choice. I'll try and find time to look at it. We've got a recent Bitcoin video that wasn't available on YouTube as well, where I wanted to go over a few future ideas. Another live stream for you to look at. Another video here, for example, of what I look at in a company. This is going over the financials of companies and how I basically want to assess the health and the value of a company and a stock and the kind of things I look for. And then we've got another live stream here. Then we've got our SCS trades and portfolio monitor. This is a little Excel spreadsheet to help you manage your trading. We've got a few of those as well for you to download, and an explanation of how to use them. We've got a video here on the TLT and the 20-year ETF. None of this, of course, has been available on YouTube. So if you want to become a member today, you'll get access to all that stuff, plus all the educational videos, but it depends on which tier you join. So let's just very briefly run through those. Tier 1, for £5 a month, you will get a exclusive video each week that is not available on YouTube. Tier 2, you get that same video, but you also get access to the public Discord where you can interact with hundreds of members, ask me anything you want. There's an Ask Tom channel there where you can talk to me directly. That's also where you can make requests for the live streams. You can share ideas with one another and access all the educational content in a nice, easy, playlisted manner as links to YouTube. And then tier 3 is everything in tier 2, everything in tier 1, plus a monthly dividend calendar and stock rating system, and a monthly video for those members to break down the companies I'm most attracted to in those stocks that month. So those are the benefits you can get for joining up today. Please consider it, but I would beg you to leave it to the start of the first day of a new month, because Patreon does not charge pro rata. It will charge you twice. If you sign up on the last day of the month, you'll get charged on the first day of the next month. So please feel free to sign up. We're looking forward to having you on board, but just leave it to the 1st of October in this case, and the 1st of each month if you're watching this advert in the future. Alright guys, thank you very much for listening. Now let's get back to the video. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at XRP. It's been a while since we last looked at XRP, several months. Not all that much has changed on the long-term Elliott wave count. We first discussed the idea of a leading diagonal off of the low all the way back in March this year, and that's still the only really bullish count I can see off of the low back in March 2020. Now we do have a way of concluding that at the current low we may have bottomed. We do have a way of concluding it a little bit lower, and then we have a much more bearish count which sends us lower still. So I figured we should start with the classical analysis first, talk about why we've come to where we've come to, why we've met resistance, and then we can use that as some kind of framework to understand our Elliott wave counts better. So first things I want to note is using the 60 and 250 exponential moving averages on the day time frame in the log chart. This is often, if you've seen me working on charts from scratch before, if you're one of our members, you'll see that this is one of the ways we help identify wave degree corrections at various wave degrees on the day, the weekly and the monthly charts, depending on the amount of price data we have for the history of the asset. So a sustained move of the 60 through the 250, back testing those levels and moving lower, is a sustained bearish period obviously, and a move of the 60 through the 250 trending above the 60 to the upside is a sustained bullish move, and then the size of those corrections will vary depending on whether we come back to the 250, remain below it, back test it, so on and so forth. Now in this case we can see how once the 60 has crossed through the 250 we get these frequent back tests of the 250, okay, and then occasionally we break it, bit of a head fake here, and then we move back below it and we come back and back test it again. back below it, come back, break it here, and then rejection. Back test it here, push back away. Now we move into a bullish phase where we drag the 60 through the 250, and then we back test it to the downside here, up, down, through it here, back test it, get pushed back down, trend above the 60, bouncing off the 60, trending above the 60, bouncing off the 60, up, and then we break through it, back test it to the upside, down. So you can see up and down. Each time we move through it and drag that other moving average with us, we tend to come back to its support or come back to its resistance, depending on whether we're trending up or whether we are trending downwards. So we can see here, having broken it again, we back tested it once, back tested it twice, stayed below the 60, come to the 60, rejection, broken it, back tested it just now, and that's what stopped us. Now this is combined with horizontal support as well, you know, long term, in this case very long term I think. Let's just bring up our support and resistance folder so we can see, you know, resistance back here, resistance here, resistance here, resistance here, becoming support here, becoming resistance again here. 0 spot 5 1 2 1 3 essentially. Now it's never an exact straight line, it's more of a region, but as you can see we've come straight back to that and the back test of a 250, and we've suffered some degree of rejection here. Now if we can get back above this level, back through the 250, bring the 60 with us, and then test the 60 on a smaller time frame and move higher, we're trending bullishly again to the upside. Got a lot to do before we can prove that though. The volume has increased at the lows here, and this move up has been supported by volume, so it, you know, that's a positive from a bullish perspective, but it could just be a sharp rally. So that's how things are looking from a support resistance moving average point of view. Now if you just bring up this mod shift pitchfork for the moment. Now depending on which pivots you use, going on dominant pivots or going on Elliott wave pivots, we have a count which says this is a pivot to here with an expansive new price extreme here, and this has a pretty nice fit. I just switched it off, where we can see the median line in play, median line in play here, and then the median line operating as resistance, and then a pop, and that pop came as we broke the median line of this pitchfork. Now if we just add in the full version of it for a moment, bear with me, you'll see how the 23.6 has also operated as regular support and resistance as well. So here, double support here, and then we've had the extra levels here of the 78.6 and the 89, channeling between the 38.2 and the 60, 23.6, median line, median line, median line, pop to the 61.8, and then to the 89. Wicking through that 250 exponential moving average, but not bodying above it. So, showing that price essentially determined to close below it on the daily. So in that sense, we are still very much, just making things clear, we are still very much in a downtrend, right? And that's obvious. And we cannot say we've broken that downtrend, so we cannot be bullish in that sense. We're still below the major 250-day exponential moving average. We're still in this downward pitchfork. If we break this structure to the upside, and we drag that 60 EMA with us, and we back test this resistance for support, everything starts to look very, very different and starts to look much, much more bullish. So those are the kind of things we really want to be looking for before we consider any Elliott wave count. We just want to see price action excuse me, sustain a move to the upside. So on the flip side of the resistance we've come to, 0 spot 51213, we can see the support we came to at 032150. Now this was previously tested as resistance here, resistance here, resistance here, resistance here, resistance here, resistance here, and has become support for the meantime. Okay, we can also see with this pitchfork we came down to the golden ratio, and in some cases down to the 89 and 78.6. So we had some confluence down here. Now if we just take a fib retracement as well, assuming that this is 1 in an expanding leading diagonal into 2, that's one of our counts, and let's just take a fib retracement for the moment off of the wick down here to the high. Okay, and then let's just adjust this to wave 2 retracement, and let's adjust it to account for the chart being in log. we can see that this is the 89% retracement. I say 89 because I always use the 89 because it's a Fibonacci number, and it just seems to, I guess we say 90% as a rule in an Elliott wave when we're talking about flat patterns and things, but 89 is a fib number, and I think that's why we say 90, to be absolutely honest, because you know it's always in play. Okay, operating, we can see that linear horizontal resistance becoming support was also on the 89% retracement. So price is retraced, let's round up and say 90% to my 89 fib level. Right, and from here it's found support and bounced. So we've sold off a lot, and I would argue that if the bullish count is correct, 1 into 2, we've sold off enough. A 90% decline is sufficient. So the issue now becomes getting off of the low in a believable way, and things are not so clear there. So let's just bring up our indicators for a minute and carry on this classical analysis section before we move on. So with our MACD, we can see that we've had a move back above the zero bound, some positive action on the histogram here, more bullish momentum than we've seen since February this year. So it could be a bit of a bear market rally, but it could be signs of a more bullish move to come. First overbought reading on the RSI since February this year as well. So once again, it could just be corrective, but if we stay above the neutral territory now, pull back into neutral and then start the trend regularly above the RSI, that's the price action, that's the momentum RSI behavior, excuse me, that you tend to see during a bullish phase. Now the ABV as well, depending on where we draw this trend line of these highs, this descending low, high, lower high, lower low, lower high, lower low of on balance volume, we can see that we've broken that trend to the upside as well. Right, so we've flipped the volume on an increase of daily volume from negative cumulatively to positive cumulatively for the moment. So there's positive signs that this rally's got some strength behind it, having come so deep, but it could be a case of just having gotten so oversold and come back so deep that we had to bounce. So I wish things were clearer. I wish it would be nice for the bulls if XRP had been polite enough to just give us a nice clean impulse off of the low, so that we'd have no doubt that we've bottomed. Unfortunately, the Elliott wave counts are not that clear. So increasing volume move off of the low, came back to major support, came back to major horizontal support and a major Fibonacci retracement, accumulated positive volume in the ABV above the 60 exponential moving average and above the median line of this mod pitchfork. Those are all positives. Negatives were, the biggest one by far is that we're just still in a downtrend, and if a downtrend's still a downtrend, then it's prevailing until it's not prevailing, which is a low, a lower high, a lower low, and potentially a lower high. That's all we can work with really until proven otherwise. So we're still in that downward trend, we're still in this pitchfork, and we found resistance at a previous support level, and we found resistance at the 250 exponential moving average. So we are trapped in a little box at the moment, a box of probabilities between having bottomed and not having bottomed. So awful lot of saying very little, you could argue, for those last first few minutes of this video, but I feel that, you know, sharing these kind of insights can help other people do their own analysis and draw their own conclusions. But really, that's essentially what it is. We've said an awful lot to say very little, which is we are still in a downtrend. That's that. Okay. So now let's do a summary of the Elliott wave counts. So let's bring these up, and we're going to start with the bullish idea first. Now I've had to break this up into separate things because this correction can be interpreted in a multitude of ways. So leading expanding diagonal, something we first discovered back in Q1 of this year and have been considering since. It's not beautiful, but it's totally legal. 3 moves into a 1, 3 moves into a 2, 3 moves into a 3, 3 moves into a 4, 3 moves into a 5, together 1, 5 longer than the 3, 3 longer than the 1, 4 deeper than the 2, everything we need for an expanding diagonal. The 4 comes very deep, almost beyond the 2, but not, so it's still legal. Therefore it had to come deep in order to retrace into wave 1 territory. That's the only way it was going to do it otherwise, so it was going to be deep. I'd like to look at it in line, to be honest, at this point, because if I take the rising expanding diagonal here, what I see is a much more believable wedge using the line chart rather than the candlestick chart. Looks a lot less extreme. We can also see projecting forward these lows here in a trend that we fell below this trend, backtested it, backtested it, backtested it, backtested it, then broke it. So this doesn't appear on the line chart when we use this trend. It only really appears, it doesn't appear on the candlestick chart. It only really appears on the line chart. And it does make the expanding diagonal prettier, at least, and we get a throw over. Now, you might argue against that being a good thing. I'd say a throw over in contracting or expanding diagonal is a positive, but it is more common in an expanding diagonal that you won't get it, that you'll fall below it. You won't get a throw over. Now, that's not a confirmation of a pattern, it's just more likely to occur than in a contracting pattern where you do tend to see that throw over. So anyway, that's the basic idea of a count. 1, 2, 3, 4, 5. Now, getting down from the high, there's a multitude of ways we can do this. None of them are clean at all. They're just a series. I've called this particular one the zigzag party because it simply wants to just take as many variations of zigzags within zigzags as it possibly can in order to get where it's going. So let's come back to the candlestick chart. We have 1, 2, 3 moves into a W. We then get this an explanation for this 5-wave move as the C leg of an expanded flat, A, B, C to get our X, and then we go into multiple zigzags within zigzags. So we get a zigzag. Now, I would love to have been able to call this move down because it really wanted to resemble one. I would love to have been able to look at this as a diagonal, but it simply doesn't work as a contracting diagonal as the wavelengths don't meet the parameters. So it's a zigzag A, it's a zigzag X, it's a zigzag Y into a W. This can be broken down into various different ways as well. However, I think a running triangle A, B, C, D, E fits into an X wave, and then 1, 2, 3, 4, 5 down into an A wave. This becomes corrective with W, A, B, C flat, X, and then Y, zigzag here into B, W, X, Y. And then we're going to turn down and put in 5 waves down of a C leg, of a Y of a double zigzag, of a larger Y of a double zigzag into a 2. So that's how you could argue that we have not bottomed yet, A, B, C, to come in this final Y. Now, there is an alternative, which is we can look at this whole thing as a triangle. This is quite different. So in other words, this simplifies the structure by making it more complicated in the middle but less complicated at the end. So we get a 5-wave move down into an A. Now you're going to not like this because you're going to see a truncation in the 5th. If we come to the line chart, there's no truncation here. It's only on the candlestick chart, but a truncation we must observe it as 5 down into a truncation. Okay, so truncated 5th wave at minute degree. 5 waves within that, 1, 2, 3, 4, 5 at minuet degree, giving us an A. Then we get a very long A, extended A, B, and a small C to get an A. We get a complex W, X, Y for our B. Not very common. More likely to see in the C wave, D, a C or D wave. Then get a zigzag with an extended C for the C. Then get a more normal zigzag for the D and a more normal zigzag for the E, giving us the B. And then 1, 2, 3, 4, 5 down into the C, and we're completed here. This is the bottom at all this resistance, and this rally is bullish given this count. However, I haven't got anything for the move off of the low other than another expanding leading diagonal. So you could argue it's a fractal of a larger pattern if you believe in such things. I don't tend to subscribe to such thinking though, but you never know, maybe there's something to that. Let's come in now and have a look at this low and see if we can force something onto it. Okay. Now, as I said earlier, XRP did not do us the favour of providing us with an impulse off of the low. It just refused to do it. So, we can look at this as, depending on where we want to look at it, from here to here to here is a 3-wave move, which would look like very much look like a flat pattern. A, B, C, but we don't have 5 waves in the C. So I'd argue that we should just start the count from the actual low and simply observe this as 3 waves. Now if we come down a little lower time frame, I want to show that you can potentially argue for 5. Okay. Now we could say 1, 2, 3, 4 and 5 with an extended 5th. So we could argue for 5 in here, but I'd argue that this is 5 waves into an A, this is a B, and this is 5 into a C, where you can see 5 again. 1, 2, 3, 4, 5. So the overall structure, let's just look at it in line. The overall structure appears to subdivide better as 3 than as 5, but you could maybe get 5 into here. Okay, so we'll give it the benefit of the doubt, but I think 3 does look better. From there we get 3 wave swing into a low, right? So that could be 5 up and 3 back. It could be 3 up and 3 back. Now at this point, instead of progressing in another clear and easy to observe impulse, we get another 3 wave swing, followed by what could be 5 or could be a double zigzag. It's ugly. Okay, so let's look at how we can organize this. First idea is that it's a fractal of, like we spoke about earlier, of the larger time frame structure. So it's another expanding diagonal, in which case a very deep correction would be on the card normally. So 1, 2, 3, 4, 5, we get a big throw over. Now the 5 is longer than the 4 is deeper than the 2, the 3 is longer than the 1. So it fits the idea of an expanding diagonal just like the larger one does. 1 and 2 in before the invalidation point. So let's now just make that minor degree, and let's put in that invalidation point back here at the low. Okay, and we'll pop a price on it. Okay, so there you go. So there's one idea. So what have we retraced so far? Because I would assume that if this was a single structure, I would assume it to be complete, especially with the length of that 5th wave. I would assume that was the top. So 61.8 down here, definite prior resistance here, prior resistance. So this is a support level right here, and it's bang on the golden ratio. So potential support here. And then we've got the 78.6 where we can see resistance, support, resistance, swing low, resistance, support. So this is another support level, lining up nicely with the fib levels here actually. And there's another one in between as well, admittedly, where you've got this high, these lows, this high, this high. That's another clear support level right there. So let's label that one as well. And we never select the support for this. It's not quite right. 5968. Okay, and the one below it. So we're just adding in what we call local support and resistance. Right, we don't need to worry about resistance at the moment. We've come to a major resistance level. We can worry about that if we make a new high. And that's bang on. That's perfect. So there's one idea, one way of looking at it. It's an expanding diagonal, and this is a zigzag, 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 a complex version of a zigzag, and this is a zigzag. Okay, with a short a short A, and a very extended C. Okay, that's one way of looking at it. So let's get this all collected up. Like so. Okay, and let's just gather this together as well as There we go, ELDSTF. Lock it in place. And now let's consider one more alternative as well. Right, so we said we can try and force this as 5 with an extended fifth. Okay, so if we can label it 1. Right, whether we get a zigzag or we get 5. We then get a zigzag to here, a zigzag to here, and what could arguably be 5 waves. Alright, so a running flat is the best you're going to get there. Now, unless we've gone down the wave degree, so what do I mean by that? We could have gone 1, 2 to here, and then 1, A, B, C, expanding flat to here. But this would be much larger wave degree, much larger time frame at a smaller wave degree. So reluctant to do that. Would rather think of this whole thing as a 2. But it is an option. I just don't think it's as likely as this. As likely as this is. You see what I'm saying? So in this case, the whole thing's an A, B, and a C at minute degree. And then we've got minuet degree inside of here, A, B, C, like so, and then here as well. And then getting down here is not going to be very pretty. Perhaps you might have to force the diagonal and get a very big A wave, or very big first wave. So 1, 2, 3, A, B, C, 1, 2, 3, 4, and 5. So come down here in a diag. You might be able to get 1, 2, 3, 4, 5, but I honestly think it's going to overlap. So I don't think that's going to be viable. But anyway, there you go. We've bullied something into there. 1 into 2, and now we're off on a 3. Now we're off on a 3. So if this was WXY or ABC, WXY, I don't believe there has to be a significant correlation between the length of Y and W. ABC, there doesn't have to be either. You can have extended A's and C's. It's just a tend towards parity as zigzags. So measuring this swing, we can see that we've come up to the 1618, and we've actually gone through it. Now on the daytime frame, we've bodied below it because we know we've got the 250-day exponential moving average here and that long-term resistance, but we've come to it. So the only real way you're going to get off of the low here is if this is a smaller wave degree 1 of a 3, and you've come to the 1618. That's how I look at it. Now you could argue maybe it's 1, 2, 3, 4, and there's a 5th wave to come out of here. But that looks like a zigzag to me, and this looks like a sharp as well. I'm not saying you can't have 2 sharps at the same wave degree. You can, but we do tend to look for we look for alternation as it's desirable and quite common. So 1, 2, 3, 4, 5 into 1 at minuet degree is an option, or 1, 2, 3, 4, 5 with another wave in here. Now I'm struggling to see how I can subdivide it. That's one of the problems. I've got teeny tiny 3, 4, 3, 4. Now I'm not saying that's impossible. I've seen very brief and small wave 4s before, but these seem to be disproportionate 1, 2s, 1, 2s. You see what I'm saying? 1, 2, 3, 4, 3, 4, 3, 4. So I'm not 100%. I think I'm going to have to label it 1, 2, 3, 4 for the moment, expecting a 5th wave to come. Not pretty, but let's have a look how it fits within an original pitchfork. Okay, straight to the median line. We've tested and now we've moved back up. We've breached it on the upside. It's a very aggressive move, even more so if we look at it outside of log. But typical for crypto to do that kind of thing. So assuming this is a smaller subwave, how far did it run? It ran to the 3618 bing target, like that. So this being an ABC, not very attractive prospect. This being a 1, 2, 3 at the 3618, that's a much more attractive prospect. Right. So whether it's part of a larger wave C of a WXY in the completion of a correction, or whether it's an impulse, right, it's probably more favourable, given if you believe this count is correct, because we've come so far so fast. Okay, so But without this, I'm not quite sure how I break this down as an impulse. It's tricky. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 would probably be the only thing you could do. Very tiny, brief wave 4. But that does look like an impulse. Maybe that's a flat. 1, 2. And then you've got 1. So this would have to be the corresponding 3, 4. Like I said, very, very brief. I have seen such brief moves before. And then how do we get another wave in here? This is now getting very problematic. Okay, let's just use the line chart for a minute. 1, 2, 3, 4, 5. We can get 5 into here. But there's nowhere to put a third wave. There's literally nowhere to put a third wave. Not that I can see. Here's the only option, and that's going to be shorter than both the 5th. Is it? No, it's not. It's longer. So you'd have to force this, is what I'm about to say. You'd either have to get something like 1 running flat into 2, 3, 4 and 5, with this being some kind of expansive move. I'm not even sure I can really account for that wick at all, to be honest. I don't think I can account for it. I'd have to ignore it in this case if I wanted to force the count. I can. It's not a problem. The 4 doesn't overlap the 1 if we put the 1 here. The 4 doesn't overlap the 1 if we put the 1 here. Okay, either. You see, the wick stays clear of where the 1 finished, but it overlaps some of the corrected move within it. I can live with that. It's not transgressing into wave 1 territory. But that's what you're going to probably have to believe. Now that is a long way from ideal. It's a long way from pretty, but you know, just don't always get pretty. Especially here in the crypto markets, well, especially lately in any markets. We've been so volatile all over the place. I find practicing Elliott wave in most markets at the moment difficult on smaller time frames. So there you go. There's your alternative bullish ideas. So we've got 2 bullish ideas off of the low. So we can just call this impulse FDF. For some reason, that's a capital I and capital M. Whatever. So those are 2 bullish ideas. We discussed them. If I had to pick one, A, B, 1, 2, 3, 4, 5, 1, 2, 3. It looks as ugly no matter how I look at it. Honestly, there's a cheese wire between the 2 of them. Neither are particularly attractive. I think I'd actually go for the impulse and the expanded flat, just because of the fib target being 1618 of this pivot here. Seems too long to be a C, but it wouldn't be the first time I've seen that, so I'd lean slightly into that if I was being bullish, but not. There's very little to divide them in credibility. So they're the bullish counts. We've spoken about the simple idea that this is a 3-wave correction, right? So W, X and Y, or if we're taking the 5 and the 5, A, B, C with a flat pattern in the middle. It really doesn't fucking matter at all. Pardon my language, sorry. It really doesn't matter. It's a 3-wave swing. Okay, so that if that's the case, we come back down in 5 final waves to here. Okay, so how can we project this? Well, we can look at parity between the A, the B and the C. Perhaps there's something there. So let's do that. And let's also take a channel here and see how we channel. That's the fib tool, you plonker. Let's try that again. Okay, so let's basically just put C on the bottom of the channel, shall we? Okay, well maybe a more abrupt C. 1-to-1 target in log is down here at 18 cents. So that's if you were to get parity. Down here at 18 cents. Okay, now, yeah, why not? I mean, if you come down 90%, why not 95%? Why not 97%? Right? You've still got the invalidation point of the longer term count, which is down here. I don't think we added that. Let's add that as well then. Right, the longer term invalidation point, not the invalidation point for this expanding diagonal, but for the longer term one. I better make it exactly 400. Okay, so yeah, you could just come down here in another 5-wave move. This is 5, this is 3, this is 5. Another zigzag within the Y of the 2, because we got that extra subdivision of another double zigzag within a larger double zigzag. So the Y appears gigantic, but when you come off of log, it's really not. It's really not at all. When you come off of log and look at it in linear, you realise this move down is gigantic. Back up, this move is roughly similar. It's only in log that it looks so skewed. So we have to keep that in mind as well. But that's the less bearish idea, that we've got 5 waves to come. So really all we're looking for here is for any bullish count to break down. So the most important level is that invalidation point. I'm sure I put one in there. I must be losing my mind. No, okay, yeah, I'm just losing my mind apparently. No problem. Invalidation point here. If this level breaks, all of the bullish counts are wrong. There you go. Alright then, so that level breaks, we are bearish and we're coming down for this C of this Y of this Y of this 2, or we're doing something worse. So let's put this inside the ELDSTF count here, lock that in place. That's now got an invalidation point, which is the same invalidation point as for this impulsive idea. And then we've got our zigzag party, as I've called it, invalidation point down here, 0.11400. Right. Any bullish count, including the larger time frame count here, all of them invalid below this level. That leaves one thing left. So let's just put this in that. I swear, things are not functioning correctly in my brain this morning. There we go. And let's just save the chart now we've done all of that. So, blah 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 blah. What's the worst case scenario? Worst case scenario is that this whole thing is a 3-wave structure to a new low, which is this. I don't know why I've got that twice. Bring it over here. So the wave 1 was all the way back in 2018, December 17, January 18. Double zigzag into the Y, into W, zigzag into X, and then we could take either the zigzag party or the or the single zigzag down into Y. I've gone for the same count, W, X, and Y, with this being a W, X, and Y, but it's just going to come deeper. Now this one we expect to finish below where the W finished, right? Because the whole purpose of the Y is to push price lower than the W achieved. So how low? I haven't got a clue. Really haven't got a clue. Because there's nothing in that prior move up. So you could come down. It's almost unlimited relative to where we are now in terms of how deep you can come down. You just can't come down back before where the larger wave 1 began, but that's in 0.00000 something. So in that sense, I think pushing just beyond the W would be sufficient. How far beyond it, I have no idea. I really don't have any idea whatsoever. A 1-to-1, not that I believe that relationship has to apply in a WXY, but a 1-to-1 would bring you down to 0.07. Okay, so like 7 cents. Worst case scenario, we could just come in just after the low, around 11 cents or 10 cents maybe. But if this really long-term bearish count unfolds, it's brutal, and it's going to just it's going to be devastating. End of story. But it's also going to be an insane buying opportunity, like literally an insane buying opportunity for the run up in the next wave 3. And I don't want to talk about targets for wave 3s until we've confirmed that we've got a wave 2, and we don't know that we've got a wave 2 yet, whether it's on the smaller time frame or whether we've already bottomed in one of these counts here. So there you go, guys. There's the options I see at the moment. If I had to lean into something out of all of them, I would lean into the idea of one move lower as my primary. So let's just bring it all back together. Still think this expanding diagonal is legit, or can at least be seen as legit, and I think this was an A. This three-wave swing was corrective, and we've got 5 to come lower in the C of a Y over 2 with a target around 18 cents. Okay, that's my best bet, but I'm telling you there's probably not more, like I said, not more than a cheese wire in between all of these ideas. But I would probably assign primary to this. In fact, let's just do that. And let's take everything we've got in this count, grab it, put it into the expanding leading diagonal folder, and rename this primary. And believe me, I am absolutely happy to be wrong, really am. If we are doing 1-2, 1-2 out of here at a smaller wave degree, bring it on, let's go higher, and I'll be super happy to be bullish. But at the moment, we are still in a downtrend. We're still in lower lows and lower highs. We've just come up to major resistance on both moving averages and for horizontal resistance and support. We've got a lot to prove yet before I get my bullish pants on. So in the meantime, still expecting another move lower. That would be my primary. Alright guys, thank you very much for joining me on this technical analysis of XRP. It's gone on for a lot longer than I thought it would. I will timestamp the video so you can navigate it more easily. And if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. I would not be able to do this without your support. And if you're interested in joining the Patreon and getting access to weekly live streams where I can talk about anything you request, all the educational material including the Elliott wave series and technical analysis series, access to the public Discord and a whole bunch of other benefits, head over, follow the link in the description box below and sign up at the start of next month. Please do not do it today, as it's going to be the last month of the last day of the month by the time this comes out on YouTube. And I don't want you to get double charged on Patreon, so just wait until the 1st of October and get in early. New dividend calendar and stock rating system will be out with a video to support that for my tier 3s at the start of next month as well. Another thing to look forward to. So take care guys, all the best. I'll be back with you as soon as possible. Bye bye.